Mr. S. Subramaniam. He's the CFO of Titan, ready with us, and good to have you on board. To begin with, there's that ordinance for banning unregulated deposits. Do you see further enforcement of the formalization theme by the government, and therefore that would come as a benefit for a company like yours?
I would think so. I think this is a regulation which is largely targeted against cash being collected by various enterprises who do not stick to any regulatory environment. Companies like us, we have something called a golden harvest scheme, which we were collecting for many years, and when the Companies Act changed in 2014 April, we were forced to adhere to the new norms, which was that we are regulated now under the Companies Act. But jewelers, for example, who were not companies, could still continue to take deposits under those schemes. And I think this regulation is largely focused against non-corporates who possibly are taking deposits. So from a formalization story, I think this is a continuation of what's been happening. And the idea, I think, is to curtail people taking money without proper regulatory oversight.
Right. So do you also expect your Golden Harvest scheme to see a pickup post the ordinance then?
I don't think so. I think that it's a scheme which has been running for many years. So it's nothing to do with this particular ordinance. Unless you think that there are other jewelers who today can't take these deposits, and therefore people may move here. But I don't think it works that way as much as it works towards wanting to buy jewelry from Tanishq. And if that is the case, then they would come and invest. So I don't believe this may have an impact on our Golden Harvest scheme.
Now, what has been the response to the revised gold exchange program, especially since you've even cut the rate of deduction to 0%? Has there been a good response?
No, the gold exchange program has been doing very well for us for the last 2 years plus. I think from July 16, when we started becoming very active in this, it's been paying very rich dividends, and as we've said repeatedly, today it contributes almost 40% of the gold that we are buying for our consumption. This used to be less than 20% 2 years back, 2 to 3 years back. So it's a significant move. It's done very well for us. It's a good customer acquisition program. It also helps us from de-risking the source of gold if there were to be curbs in the future. Which comes up with current account deficit situations and so on and so forth. So I think it's a win-win from every side, if you ask me. So yes, it's continuing to do well.
Right. Also wanted to understand what the trend is that you've observed in the month of February, because you mentioned earlier that there are more wedding dates in Q4. So just wanted to understand how business has been, and I'm sure there must have been a massive uptick in volumes already.
I can't say that as much. Okay. That's because I think the gold prices have been very high in February. So the market as a whole has been quite dull. We've done quite decently compared to our own internal targets, but the market has been really badly hit. I am seeing some sort of a turnaround now that the gold prices have softened a little, but February was a very tough month for the market as a whole.
How has the market share shaped up for you over the last 1 to 2 years? Do you believe that the move from the unorganized or semi-organized to the organized sector has been slower than expected? And what are your targets when it comes to market share?
No, I think the move from unorganized to organized has been happening over the last few years with all these measures for compliance which are coming up. But I think our market share gain, particularly even within the formal jewelry sector, has been exceptional. I'm sure we've gained 1 to 1.5 percentage points as far as market share is concerned in the last year and a half. So it's been very good. Very clearly, when you see numbers being reported by other jewelers, whether they are listed or whether they are not, at least from the street, the view is that growth has been tough to come by. And in that context, something like a 20% growth that we've been reporting on an annualized basis clearly means the market share gains are continuing for Titan at least, yeah.
Okay. You've also been investing heavily in branding and promotion of the watch business as we see it every day. When will that start showing into results, you think?
Well, watches have shown tremendous results over the last year. The fact that we are now something in the close of range of 15% EBIT margin means that this is actually the all-time high that we've ever achieved in that business, even after the peaks that we achieved in 2012. So I think we've done a lot of things right in the watch business. Cost was a major area we focused for the last 3 years. But importantly, the focus on brand building, design, collections, the new wearables, which have been doing very well for us. The fast-track wearables have done very well. And of course, the new channel, the e-commerce channel, which today almost contributes 10% of our revenues in the watch business. All these have contributed very well for a good growth in the top line. And that, along with the cost reduction programs that we have run over the last few years, I think has yielded in something like a 15% margin, EBIT margin, which, as I said, is exceptional. So I think we've done very well by that, yeah. But the advertising on a quarter-on-quarter basis could shift. That's because of launches which may happen, and that's one reason why the margins on a quarter-on-quarter basis may look either very high or very low. But I would always say that one would want to look at margins on an annualized basis, four-quarter rolling basis. That may be a more realistic way of looking at it, a fair way of looking at that margin. And if that was the case, I think, as I said, we've been doing very well in that.
And at Titan, you've also now launched saris. So what exactly is the plan? Is it going to be a one-stop shop now for saris from jewelry?
Well, it won't be a one-stop shop. The brand itself is different. It's Taneira. We have 4 stores at this point in time, and we plan to open many more in the coming financial year. It's still early days for that business, but the value proposition as far as the customer is concerned seems to be doing very well. We've got repeat customers. The experience at the store for them has been very good. I think it's just a question of getting a few things at the back end right, and we should be rearing to go. The customer is practically the same as the jewelry customer. To that extent, there are a lot of similarities there, and therefore the approach can be similar. But the format itself and the stores by themselves will be separate.
All right, that sounds fairly interesting. Thanks very much then for joining in, giving us a sense as to how things are going on with the company, and clearly seeing a strong market share that has grown. The watch business as well has seen stellar growth, and now it's a lot of focus on brand building. That's Titan at 1057.